what is the difference between decentralized insurance and what people are used to in their everyday lives with their like auto insurance or healthcare insurance?
What we talk about is a disincentive loop in traditional centralized insurance versus a incentive loop in decentralized insurance. So it creates a system where it incentivizes good behavior. It incentivizes everyone working together. It's creating a system where everybody is treated in a more, equitable way.
What's going on, everybody? JT here, and I am with Adam Hofmann, the founder and CEO of Nimble. This is a decentralized insurance protocol that's building on Algorand, at least for now. And I'm really excited to have this conversation because, as we can see throughout a lot of the crypto ecosystem, there is a lot of fear around hacks and exploits and all of these other ways that people could lose their money in DeFi. And it does seem like some sort of insurance could be the solution. So I really appreciate you taking the time out of your day, Adam, to join the show. And I really can't wait to learn more about Nimble.
Yeah, I'm psyched to be here, JT. Thanks for having me. And spot on. I think there's a huge place for insurance and just overall real world use cases. So I'm excited to dig in.
Absolutely, absolutely. So let's start off with, maybe a little bit of background on yourself, and then we'll dive into what exactly Nimble is, because I'm sure people understand what insurance is in general, but when you bring it into the decentralized blockchain world, it starts to get a little bit more conceptual as opposed to like, I don't know what the word that I'm looking for is, but I believe that you could take off from where I'm getting at right here.
Yeah, for sure. So for me, my background is a little bit different. So I did spend 22 years in insurance. So I did a lot of different roles in insurance, company side, owned and operated an insurance agency, did risk advisory services, things like that. But prior to, I went to Berklee College of Music. I studied music. I performed. Piano's my instrument. And I only bring that up because going from that industry to insurance is a little weird, right?
Right.
But the weirdest part of all is that 22 years later, insurance actually made less sense. Like the more intimately involved you got in it, the more you're like, but this doesn't make sense, right? So that's where Nimble was born from. For me, crypto space, blockchain space, to me, it's about the decentralization. And it was that technology that I believed could kind of reposition, or like we say, rethink insurance, right? So that it isn't about fighting about premium increases and then getting some weird explanation that doesn't really jive with what you're feeling as someone paying premiums. And we go into deeper what that means, but we all understand on some level the pains in insurance, whether it's rates went up or why did it take so long to settle my claim or whatever. And a lot of that has to do with the inefficiencies within the centralization of insurance. So that's what excites me about blockchain, is just that amazing possibility.
Yeah, absolutely. And I'm sure every one of us have used insurance in some way, whether it's health insurance or, a car gets into a car accident or something, and then out-of-pocket costs are way more than we expected them to be. Or maybe, maybe the insurance isn't even giving any money. I've been in accidents where they're fighting tooth and nail not to give you any insurance money, which is really, kind of terrible when you think about how much money you're putting into these systems. But
yeah, absolutely, JT. And like, I think it's important too, is like to remember. Also, the thing that I always bring up, and this is part of that inefficiency, is like, how much money are they spending trying to save $500 in like a supplement to pay for something on your car? How much money are they spending in the managers, the claims adjusters, the appraisers, the documentation, in trying to say, like, they say it's, we're going to save $500. That way we don't increase your rates. Well, when's the last time you opened up your envelope with your bill and it was lower? But like, they're doing that, but what they're not saying is, did it cost more than $500 to save $500?
Right.
This is the stuff, right? You can see I'm already.
It's, I mean, in a totally different sense, it's almost like the fact that we spend more than a penny to make a penny, which is mind blowing to some extent. It's just like, what are we doing with our money sometimes? But okay, let's let's do a little deep dive on. I'm sure people know what insurance is, so I don't want you to do a deep dive on like insurance per se. But what is
Mhm.
the difference between decentralized insurance and what people are used to in their everyday lives with their like
Yeah,
auto insurance or healthcare insurance?
yeah, it's a great way to frame it, JT. So think of the traditional insurance space. You pay your premium, right? That premium, whatever it is, it doesn't even matter, goes into the insurance company. Let's just call it $100, right?
Right.
So it goes to the insurance company. And a lot of that is based on their loss ratio. And that just means how much premium did they take in and how much did they pay out in claims, right? So they figure that in. In that loss ratio, it's the cost to settle a claim, which is what we talked about. How much did it cost to staff the claims department to settle a claim and to send someone out to investigate, whatever, all those things. So that's what you're getting with your premium, right? And I don't think inherently there's nothing wrong with the model, right? Like they need to make money to stay afloat. Insurance is critical to the overall economy. So it's not like it's this evil scheme that they're building. But what we talk about is a disincentive loop in traditional centralized insurance versus a incentive loop in decentralized insurance, which is no different really than centralized banking, decentralized banking, CFI, DeFi. Like, so if you think of decentralized insurance, when you pay that $100 premium to your, instead of insurance company, risk pool, which is basically a liquidity pool that's set to pay claims, when you pay, you're contributing to that risk pool. And so are the investors providing capital, which end up being like the insurance companies, right? They're giving the necessary collateral to that risk pool. But what that creates is not just capital efficiency, but let's take the example, like you said, I haven't had a claim for so long, or this risk pool had way lower claims than we thought because it was just a great year. Well, that means that you're contributing your premium into a system where everyone else is contributing their investment and collateral and all that. If that year is more profitable or that period of time is more profitable than expected, that means you can take some of your premium back because you overpaid. That's what you end up creating is without impacting the LPs. The LPs still get their APY and all that. So it creates a system where it incentivizes good behavior. It incentivizes everyone working together. No, like if you take your money out, the LPs aren't burned. If you have a claim, the LPs aren't burned. It's creating a system where everybody is treated in a more, equitable way.
Right. And what incentivizes the investors or LP providers in this scenario? So where is the yield generated?
Mhm. So the yield is actually generated. It's good to think of the way the yield is generated as built into the premium, because
Ah,
then it doesn't become as variable, right? It's not like, oh boy, this investment didn't work out. So there's a baseline APY that's built into that premium. So if it's a very, like, let's just say, let's talk about like DeFi. Like if it's a protocol that has stellar security, smart contract audits, and cybersecurity, and really great management team, then it's less risky to insure that, right? So the APY for that investor subsidizing the risk pool is going to be lower than the one that's, it uses a bridge. And even if it has great security, there's just a risk to that bridge.
yeah.
So someone subsidizing that should be getting more reward for that risk. So that increases the APY. But the cool thing is that's like baseline. The more people who buy insurance in those risk pools, so that's called the penetration rate, the more that increases, so does the APY. So again, it's incentivizing people not to pay more money in premiums, but just to get more people to participate in this system. And that'll increase the APY for the LPs.
Ah, I see. That's really really interesting. So I guess I suppose have to ask, will there be a concept of risk like profile when people go to use Nimble? So say I'm going to use a specific application and Nimble Insurance is partnered with this application. I can get some sort of insurance plan to work with like Tinyman or
Mhm.
AlgoFi or something of the sort. Will there be some sort of risk profile for each application that Nimble works with? So I'll be able to know like, hey, this one is less risky because it has X amount of less points of failure, whether it be like it doesn't have a bridge or the other one does have a bridge. Will users be able to know the difference besides the cost of premium? Because I'm sure that'll kind of tell the difference in general right there. But will there be a sort of risk profile for each application that Nimble is connected to?
Yes. So we're working on that with those project partners, right? Like we
Yeah.
don't want to do that unilaterally and say, here's our idea of what safety is, right? Like,
Right.
so we're working with the project partners. We're working with Entersoft for one, other security firms. We're working with Asset Reality, and we're actually having conversations with law enforcement agencies about what their risk metrics are and how they're determining it. So, and we're doing that to help drive a equitable and fair premium, and then ultimately APY. But also, it's important to note that we're doing that to help the projects because we don't. So there's this fundamental misunderstanding of insurance that like you hear all the time. Like I think about like you see those like contractors in their vans and they're like, we're fully insured, and I'm like, it would make me safer to say if you said like we're gonna do great work. Like I don't want you to break my house, or I don't want you to. So there's this concept that insurance is like, we have insurance, we're good. We believe that the idea of insurance is the absolute backstop, that you've done everything you can to be proactive to prevent a claim or damages or an injury. So using that kind of risk score or trust score idea is not just as a gotcha to a project. It's like, this is where you're at now. But if you can do these three things over the course of the year, you'll be able to go to, this level. And look how it will benefit your users. Like, look what we've seen in the past. This might help with user adoption. This might help, getting safer might help you with just your overall costs of operation. It's being proactive in that way. And then giving that sense of security to users who might be on the sidelines, right? They might be saying, I kind of want to participate, but I can't make any sense out of this. And it gives you that kind of stamp.
Yeah, and I know there's a lot of there's a lot of people that are hesitant to jump into DeFi, and for very valid reasons. I mean, I personally think DeFi is the future to some degree, and it is actually what made me very excited for cryptocurrency in general back in 2017. But there still seems to be a lot of apprehension to it. We've got a lot of bridges that are hacked. We've had just smart contracts in general that are either exploited or just maybe not working in the way that they wanted to work. And of course, I'm not talking about just Algorand. This happens all throughout the ecosystem. And actually, knock on wood, fortunately, it hasn't really happened on Algorand too much aside from that tiny man exploit, which comparatively was, very little. Of course, people got harmed in it, and I don't want to like discount that and take that away. But overall, it's been pretty secure in the Algorand ecosystem. But I want to ask, what projects will Nimble be partnered with right away when it does launch? Will I be able to get an insurance premium or insurance package on basically any application in the Algorand ecosystem, or how will that work?
We're pretty close to every application in the ecosystem. So we're regularly building this. Taylor, Annalie, they're kind of on that growth partnership side. So they're doing this with Sonam and her team, and Sonam's our chief insurance officer. So we're already working with Folks Finance, Terra Wallet, Tiny Man, HumbleFi, like you go down the list. And then others that haven't launched yet, we're continuing to talk to, which is one of the amazing things about the Algorand builders. It's a very open community. Pact is another, AlgoMINT, like it's
The list goes on.
Oh, really? Yeah.
No, I was just saying because you're like, you're listing them all off, and I was like, the list goes on. It's probably never ending.
Yeah. I thought you said he was just on, but the list goes on for sure. I want to say that because this is something that other people have kind of not said, but you read between the lines or you see it in tweets, whatever. These projects aren't doing it because they don't believe in what they're building and they're scared. They're doing it because they're really good risk managers. And look what just happened at FTX without really good risk managers, right? They're looking at this saying, we are doing absolutely everything we can to not have a vulnerability. But we live in a world that isn't like, we can't bubble wrap the entire world. We can't. Absolutely. And they're doing everything they can to be secure. And part of that is working with Nimble to create a system that can give their users back any money in the off chance that something happens.
Right.
So that's important to note. It's not a representation of them saying oh yeah, I won't do smart contract audits because I can have insurance. That's not it. And that's
Right.
not it for Nimble either. We want to provide insurance to projects that are operating at that level and understand their customers and want to keep those users safe. So
Right. And to some degree, I'd imagine if there's a project that didn't want to do audits on their smart contracts, but did want to use Nimble Insurance, there's a probable chance that the premium would be higher in that risk pool than another pool because they chose not to use an audit service to double check their smart contracts.
and
And
beyond that, I think it would not even just be premium. I think at that point it would be uninsurable. It would say like once
that's
once
fair.
you get a smart contract, because we don't want a system where you know what do they say? One rotten apple spoils the bunch, right?
Right.
Like, even if someone's paying an ungodly amount of insurance, you want to help them understand why a smart contracts audit is important, right? So, and I don't think we'll see that a lot, to be honest. But yeah, you're right. You're right.
Right, and your point's well taken as well because it's I'd imagine at least that's not the case where a lot of these projects are working really hard to make sure that their platforms are secure, and they also want to use insurance as a backstop, as you said. And this is a really great corollary to the traditional finance world where you have banks and all sorts of other big money players that also have a risk of being hacked or exploited, but we never really think about it or worry ourselves about it because they're FDIC insured.
Yeah, exactly.
Um,
Yeah.
so it's not like these exploits and hacks only happen in something like crypto. It's just that most of crypto is not FDIC insured, so the risk profile is through the roof because
Right.
you could lose your money at a bank today if somebody
Yeah.
hacked into your account or whatever. I've had it happen. I've had my account drained on one of them before, and the bank very easily gave me the money right back because they didn't care. They were FDIC insured. They're like, yeah, we'll give it back, we'll investigate, and if we find out that it wasn't you, then you can just keep the money. We refunded you. And it was
Mhm.
super simple. But that can't really happen currently in the crypto industry, which is why I personally think insurance is really going to be the next big thing that brings in that next wave of adoption, because
Mhm.
there are people like you and I who maybe have high risk profiles and are like, whatever, yeah, we'll jump into the crypto ecosystem. But there's an enormous amount of money out there, whether it be retail or institutional money, that are waiting for these assurances to show up before they start dumping millions of dollars into these ecosystems. So I suppose my next question has to be, when does Nimble launch?
That's a great question. So we are looking at our testnet. Will be launching like our open testnet, like public testnet, uh, incentivized testnet, as we're saying, right? Because there's a lot of cool incentives. But that'll be December, and then we will be launching like end of January, beginning of February timeline on mainnet.
Nice, right around the corner. Awesome, awesome.
Yeah, really right around the corner. Yeah.
So I guess the next question is going to be, who's insuring Nimble, right?
That's a good question. Yeah. So ultimately, Nimble is insuring Nimble, but
Yep.
it's not as if I left it at that explanation, that would leave a lot to be desired. So part of it is absolutely all the things that we talk about from an underwriting of a project is smart contract audits, a strong cybersecurity program. We're doing all that. But the other thing that we're doing is we are creating a system where there's multiple layers of capital for everybody in the Nimble risk pool. So one of those layers is called the Nimble Common Reserve. And this is important to note. And anybody who knows me or has ever been like in person with me, I want to doodle right now so bad because it's so easy for me to draw. And I'm like, well, next time I'll have a whiteboard behind me. But if you picture like the tiny man risk pool, right? And then there's premiums in there, right? And there's LPs put their money in there. And then there's a folks risk pool. And then there's a packed risk pool. And then, you keep going through it. So they're not they don't, if something happens with one risk pool, it doesn't affect the other, right? That's how you keep that diversification. The Nimble Common Reserve is on top of all of the risk pools that exist in the Nimble ecosystem. And what that creates is a fund that is used in case one of those risk pools doesn't have enough money, right? So you go to file a claim and it's not like, oh, well, you bought coverage for 10,000 algo, but we only have enough to give you 5. It's like, all right, shoot, that was a black swan event. That risk pool got drained, but now we have this common reserve so that we can pull from to use money. On top of that, we have decentralized reinsurance, and we're talking and negotiating basically with other layers of reinsurance capital. So what that means is not only are those risk pools there covered, part of that risk that those other insurers are coming in on, and they call it layers. If you picture it literally like just, rectangle layers of money, that's there in case there's a situation with Nimble. There's all that money's there because those risk pools are part of that ecosystem. Because if someone hacks into Nimble or there's a vulnerability and they can get into one risk pool and take it out, well then that risk pool shouldn't be penalized, and that's where the capital security comes in.
So how does the money flow in these risk pools? So essentially, you have the siloed risk pools that you just mentioned before. You've got your Tiny Man one, you've got your Folks Finance one, and so forth. Where do the funds come from in the common pool that then would kind of backstop something that happened in one of these?
Yeah, great question. So when you pay your premium, a percentage of that premium is diverted to the Nimble Common Reserve. And when you stake as an LP, a percentage of that is diverted to the Nimble Common Reserve. It's also important to note that Nimble Common Reserve is not for not an operating budget. It's not an operating it's used to pay claims in the event that there isn't enough money in an underlying risk pool, which is highly unlikely because the premiums are based on expected losses, which means based on all the risk identification and the data work and the underwriting analysis and the actuarial tables, the premium should be enough to cover any claims. So that's true risk sharing. Everybody's money in there should be enough to cover expected claims. After that, if it goes beyond that, which is already like an edge case, right? That's when the LP funds come in. If it goes even beyond that, now you're talking like those black swan events. That's when you start getting into the common reserve and those other layers of insurance.
Right. And, that honestly sounds like something that might be difficult to quantify is expected loss on these pools. So how does Nimble go about determining, expected loss on various protocols? Because of course it's got to be different for each one depending on how secure and insecure each protocol is. So what factors into that equation?
Yeah, we should have Sonam on another either YouTube or on one of your Twitter Spaces, because she's our chief insurance officer. She's a fellow actuary. She's brilliant. So I can give you the high level and she can give you the in the weeds level. But the high level is a ton of data, right? So Xavier is our chief data scientist. He's and his team, they're constantly pulling data from not just Algorand, but from all chains. Like this is what basically it parses down to. This is what makes a smart contract vulnerable.
Right.
This is how we can identify it. This is in the universe of smart contracts, this is the probability of any of them being hacked. And when they are, it's not 100% of the TVL that's drained in a hack. It's a percentage of. So what it is an analysis of all of that and boiling it down to basically, management risk. Like, what's the team like? Underwriting metrics on how does this look compared to other protocols that have been hacked? And then, all of that coming into that risk score to make sure that premium's there. It's a lot of data. It's a very robust data set. And I will say it's probably as the founder CEO, and I know that the team will attest, I probably underestimated how long that would take for them to put together, but they have done it. And with the help of some really great partners, they've done it. So that's how we start. And that's why those additional layers of capacity are important, because it is nascent. It is new. We are borrowing some methodologies from the traditional insurance space, but in the case of, it gives us wiggle room, basically, having those additional layers of capital.
Awesome. So I'm going to bring this conversation back to the testnet a little bit, because you mentioned that over the next month or so, maybe a couple weeks into December, there will be an incentivized testnet, which sounds great to everybody. But what kind of incentives are there, and are you concerned that much like every other incentivized testnet, you'll have what are called like reward mercenaries that are just there to reap whatever benefit that's being given off in the test net and kind of just like disappear afterwards and not really give any valuable feedback?
No, that absolutely. And it's unfortunate that that's something we have to consider, but we're doing it in a way. So, Michael Cotton is an advisor. Steve Kakinos is an advisor. So I'm working with them closely to make sure like the tokenomics of what we're building makes sense. And, the economics of what we're building makes sense. And then our marketing and community team, Sam, Lauren, Cooper, they're doing that kind of, let's see what's worked in other protocols and let's see. But a lot of it comes down to rewarding the people that are truly participating in the system, right? We have I don't know if it's a benefit. It's a benefit in the test net. It's not a benefit in the real world. We have a benefit in the test net of we have to test the claims process, right? So part of that means, all right, if in the test net we're not going to use real project names in the test net because we don't want those partners to get, like all of a sudden it blows up on Twitter that they were hacked. It's like, no, it's fake. So
Yeah.
if there's all these risk pools on testnet, we're not going to go in and say there's been a hack on every single one of them. So you have to be engaged in like, all right, then I'm going to stake in the JT risk pool and let's see if there's a hack, right? So it becomes this thing where there is, and then the ability now with other kinds of software to recognize what someone's doing also in Discord and how are they promoting the true benefits of this, and how do we analyze if they're really interested in Nimble or they're really interested in the rewards. And we can't do everything to remove those people, but we do want to make sure we incentivize the people who are, and you can see it even now on Twitter. It's so cool to see like just people.
There's
to
a
me,
lot of,
as a guy who just kind of thought about Nimble and like, let's try to build this team, like to see people saying like, I'm excited for this project and I support this project. I'm so grateful for that. So we don't want to forget about those.
Yeah, absolutely. There's a lot of interest in Nimble. And as I said before, I think it just comes all the way back to the concept of DeFi being very intriguing, but also kind of terrifying for people that don't really have the same level of risk appetite that someone like I have, or other people that are, full-fledged DeFi degens at this point. But I want to ask: is Nimble going to have their own token? Does Nimble plan to have like a little Nimble coin, or how does that work?
Yeah, we've actually, we do have a Nimble verified token, verified on Para and Algo Explorer. We will more details will be coming this year, but we will launch that token in 2023, like Q1, and it's a utility token, so it's the ability to stake in the risk pool, and you basically get a Nimble token to represent that stake. That token generates, obviously, it creates rewards too. Part of that testnet incentive is the Nimble token or increased APY, that kind of stuff. And we're just finalizing that. We put a lot of thought and a lot of work into it. We don't want to have a token for the sake of having a token, which I think we've seen in 2022 how that can happen.
Absolutely.
So we want to make sure that it's it helps the system at Nimble. And one of the ways it does is to attract insurance professionals to also participate in a decentralized way. They get their credentials verified, they stake Nimble so that now they're certified and they can get paid in Nimble. And it creates a system where, again, we're incentivizing a good loop instead of a bad loop, right? And that's the intent of the token.
Absolutely, and we certainly have seen projects launched that don't likely even need a token, and it's like, what is that for? It's very interesting. But of course, I hold a bunch of ASAs, so there's plenty of tokens out there that I do think should exist. But while I think of the next question, how about this? Fill in my audience with anything that we haven't touched on yet that you want to make sure that people know about Nimble, because we talked about how insurance works, we've talked about how the risk pools work, we've talked about the common pool, the token, the testnet, and so forth. But I've got to imagine that there's something else going on at Nimble, whether it be future partnerships or something interesting that I haven't yet asked. So I want to leave the floor to you for this one.
Yeah, no, I appreciate that. So we're always thinking about ways to bring new people to blockchain for the same reasons we've been talking about, JT, which is we believe in the technology and the power of democratization via technology and decentralization. So a lot of when we think about a roadmap, we think about how can we make this easier. We actually we call it, like, internally we call it the FIFA experience, right? Like, for what it's worth, that whole idea, in whatever people's opinion is of it, that whole idea that from a marketing standpoint, we'll put that aside, but that you could go to FIFA Connect Plus, just use your credit card and get an NFT without even knowing it's an NFT and that you're on blockchain. I know why marketing, there would be a problem. Like, why is an Algorand there? But we think a lot about that, because if we're opening up the ability for anybody to invest in a risk pool, we're putting a barrier to entry by saying, but you have to do it by going and getting this and doing that and buying some algo and waiting for them to hit your account. But if instead we can create a system where the people buying insurance are going to be degens, they're going to be an algo, that they're participating, they're projects, but if someone wants to invest and they can do it without going through that process, and it feels very Web 2 to them, that just means that they're now experiencing truly the power of this technology. And then when they start to understand it, and you say, all right, if you want to take custody, for example, of your NFT representing your investment, just download one of these algo apps, and it's actually not that hard. And that brings money to Algorand, and that brings users to Algorand. So that's something that we spend a lot of time thinking about. And on the heels of that is, our plan is not to build Nimble only to provide protection and security for the Algorand ecosystem. Of course, that's part of it. But we also have some really great partnerships that I can't announce yet, but really exciting real world partnerships to bring, and this is another thing that's great for Algorand and it's great for the community, to bring insurance coverage for real world assets onto the Nimble platform. And what that's going to create is, obviously, there's going to be an influx that brings capital to the system, that brings users to the system. So that's exciting. To me, that's exciting because that's going to open it up to a whole new group of people, number one, but also really create some impactful, positive progress in the insurance industry.
That is actually really exciting. So you're saying that there could be a day that I can use Nimble to maybe insure some liquidity positions I have on a DEX, but also maybe insure my car also on chain.
Yeah.
I mean, that's fantastic.
Well, cars are tricky. So, like, I don't want anyone to think that, next year we'll be insuring cars because they're so regulated. But one of the examples I use in the power of blockchain technology as it relates to insurance is this story that my daughter and I pulled in to grab a coffee from Dunkin' Donuts, and the line to the drive-thru was so long. So we just pulled over, parked. She ran in, she got her coffee, and she came back out, and she said, "Oh, there's someone rear-ended someone in the drive-thru." And first of all, what? How do you do that? But the person that was rear-ended said, "I'm not moving. I don't want to move my car. I want to wait for the police to come." And now, meanwhile, not a big deal, right? That people have to wait for their coffee. But there's this line of people. And that woman who didn't want to leave is doing that, in my opinion, for one reason. She's already thinking this insurance process is going to be a pain in the ass. I don't want to get ripped off. I don't want this person to say I backed into her. I want to take pictures. I want the police report, all of that, right? So that tells me that, okay, there's the pain point. Insurance is creating this ridiculous, unnecessary mess. Now imagine one of those cars was insured with Nimble, and, I won't be greedy, and the other car was insured with, JT's Decentralized Insurance Company, right? So that happens, right? We know there's impact because cars have computers. Cars also have the data of what happened. So I know that car one rear-ended car two. And we know that in Massachusetts, when one car rear-ends another, that car's at fault. So all of this is already done. This is almost like zero knowledge proof stuff. Yep, that's what happened. But where it gets cool is, all right, to show you in good faith, Nimble is transferring $500 to your account to basically JT's insurance company insured account. The car that got rear-ended will get you the full amount once we're done with the appraisal. Yeah. But this is enough to know, oh, and by the way, we see that you're at Dunkin' Donuts. This coffee's on us. And now that happens in how long in the decentralized world? A minute. That to me is like, who wouldn't want that?
Right.
Right?
I mean, that's it. If you can pull it off to that extent, it's truly revolutionary because, I mean, in that exact scenario, it could take weeks before you get, the money that you're supposed to get. You might not even get it because the insurance company might fight you over it and say like, hey, for this particular reason, this wasn't actually covered. And it could take just really like weeks before you see the benefit of the insurance that you're paying into, which is just out of control. And if it really could be something that's settled in seconds or minutes or something of the sort, it really could revolutionize the whole space. And I could imagine there might even be some pushback to what Nimble is building. Have you experienced any pushback from any like legacy insurance companies, or do you think it's still kind of fortunate enough that maybe the ecosystem isn't big enough and there isn't that sort of pushback yet? Or what have you been seeing out there?
No, but I think it's, partly because of like, we're not a threat to them. Right now we're not like, they're not like, oh boy, here comes Nimble. But I do expect there will be pushback. But I also want to say to anyone who may be an insurance professional, I say this all the time, it shouldn't be a threat. It should be an opportunity, because insurance companies don't really make their money on settling claims. They make their money on investing, basically, right? They take the excess premium and they invest it. So why not just put that capital to work in a system that can generate you, like if they get 3 to 4% right now as an investment and they can get 5 to 10% in yield, well, that's just more profitable for them. Right. So I don't see it as a thing that should feel like a threat as much as it should feel like an opportunity. But we'll see. We'll see how that goes.
Yeah, I was about to say, I mean, that all sounds great, but we see so many things that I feel like seem like no-brainers that end up being a threat to the legacy systems that existed, which is always strange because it's like, why not just adopt this better system? I mean, you guys have all the resources to be able to do it. So, but that being said, this is so far it's been fantastic. I want to have a couple more lighthearted questions as we move a little bit off of Nimble. Do you have a favorite team to win the World Cup this year?
How weird is it for me to not say, like, well, I'm just going to say this. I am a huge Messi fan. Like, I think Messi is, obviously he's phenomenal, but I've loved him forever. So I have to root for him in his last World Cup. Like, Argentina's got to win. Like, you're right. Like, it's just, so that's my team. That's what I'm going for.
Hey, it's his last one. I mean, you kind of have to root for him if that's the case. I mean, of course, I'm not the biggest football fan here personally. I know that's a heresy to some people in the space, so I'm gonna you'll say that lightly and tread lightly. But I'm hoping for the United States team. From what I understand, they're not going to win. It's very unlikely that they're going to win. Maybe the women's. I think the women's team has a really great chance because they're phenomenal. But the men's team, not so. I don't think they're going to make it this year. I mean, I think there's a chance maybe 2026 when it comes to the Americas. Maybe they'll have a little bit more oomph in their step because it's a home field advantage, so to speak. But
hopefully they can get the program going. Yeah, I agree. The women's team. We watch all the women's games.
They're great.
And, Sophia Smith, who's there, like a new player on the national team, might be taking the place of my actual like favorite player, men's, women's. The way she plays with such like intensity and joy, and I just love it. Like I think it's amazing. So shout out to Sophia Smith from this random guy at Nimble.
Fantastic. Hopefully she watches, right?
Yeah.
Is Nimble going to be at Decipher this year?
Yeah, I will be there. Cooper will be there for both the recoup and, obviously he's with Nimble as well. Yeah. And I think Yannick will be there as well, our tech co-founder. But I am speaking on the 29th and we'll be demoing testnet and all the things that go with it there. Oh, and we hopefully will be, can't promise it, but we have the NFT collab with Goanna. It's called Insurance Rockstars. And I think we'll be able to show what that full evolution looks like for one character, to go from like stuffy insurance person or stuffy insurance character all the way through to rockstar character. So that'll be super exciting.
That's fantastic. It seems like the Goanna team really has their their tentacles, so to speak, in a lot of the projects going on in the ecosystem, which is great to see. Honestly, they're gold star in the ecosystem, to be honest.
Yep, they're great, and Ben's great. So it's just good people. Continuing to work with them. I'll do that all day long.
Absolutely. Honestly, the space, I will say, the Algorand ecosystem in general is probably one of the best communities out there. Of course, we all want it to be bigger and we want it to grow. But I've been in the crypto sphere since 2017. It maybe wasn't until 2021 that I started making like a more public facing venture into it. But I've been a part of various ecosystems since then, and there isn't anything I've experienced that's as welcoming and knowledgeable and even willing to criticize their own as the Algorand community. I think it's very healthy, it's very great, and it's truly fantastic.
Yeah, I agree. I agree. And even the criticism point, I think that's important because we're not going to get better as a community. We're not going to build better projects. We're not going to bring people into Algorand if we're not giving, and I will say, constructive criticism. Because
right.
I can do without the just randomly just like disagree or like this is a lie. I'm like, well, you got to give some kind of information here. Like if you're just kind of throwing, but that's the world we live in. So
yeah, I mean, it's the constraints of 128 characters on Twitter or whatever, whatever the limits are. Well, this has been truly fantastic. I'll be at Decipher, so be sure to run into myself and I believe the rest of the crew at the next blocks. We've got David and C. Will. They'll all be there as well. Hopefully, we'll have some cameras and some microphones. So if you want to stop on by, whatever little table we might have set up, feel free.
I'd love
and
to, yeah.
Otherwise, why don't you take a second to let the audience know where they can go to learn more, whether it be a website, Discord, Telegram, wherever they could go to learn more about Nimble. Let them know.
Yeah, so go to insurenimble.com, which is INSURE and NIMBLE.com, and the same handle for Twitter, Insure Nimble, and the same for Discord. So, you can go, and all of those places will link together. So you can, do your thing, look around, hit us up.
Awesome. Well, it's been a fantastic conversation. I really appreciate you taking the time out of your day to join us and fill myself and the audience in on what's going on at Nimble.
I appreciate it. Thanks, JT.
Of course. Till next time.
Yeah. Take care.
All right, everybody. That was my conversation with Adam Hofmann of Nimble Insurance. If you liked the content, smash that thumbs up button and consider subscribing to the channel. It really helps the channel out a lot and I'd greatly appreciate it. To support the channel further, check out the video description down below for links to get $25 towards your next investment in real estate through Lofty AI. Lofty AI is a tokenized real estate platform where you can invest in real estate for as little as $50 on the Algorand blockchain. So check it out, use that link down in the description, get your $25, like and subscribe, and we will catch you in the next one. Thanks.